Good morning, good afternoon, good evening, good night, wherever you are, whenever you are. Welcome to a new DC live stream. My name's Matt. I'll be taking you through the latest Bitcoin technical analysis today. The market is still not looking flash, so we're going to talk about the macro, we're going to talk about the micro, and hopefully give you guys a little bit of hopium about when this sell-off is going to end. First of all, I want to apologize if I sound a little bit funny. I just got a new tooth today, so I'm a little bit lispy. And yeah, if I sound a little bit funny, that is the reason. Alrighty, so looking at the weekly, we can see that Bitcoin is clearly still in a downtrend. We have not yet managed to create a higher high from our previous target, which was $25,000. Now, a thing that we can look at is because we've created now a lower low from the previous low, we can say and return to somewhat of a bullish stance once Bitcoin closes a daily candle above 21,500, which is the whereabouts the candle high was for this previous huge candle that we had just last week. So once we create a higher high from here, so we would need to go higher high, create a higher low from this low, and then a higher high once again. And this would be a change in market structure, making me feel bullish, and that we will finally see a reversal in the market. I did speak about last week things that were concerning me. We had the stochastic RSI weekly moving averages at the overbought section of the indicator, meaning there was only one way, which is one way down. Unfortunately, there is no other good news on any other indicator right now. Something that we could look forward to is if we do bottom out in the next week or two, which is what I'm kind of expecting as our low, we should have a bullish divergence. So we've created a low low in price wherever we head down to, with my target being $13,000. And then we hopefully will have a higher high on the normal RSI as well down here, we can see. So we can see that right now we had this low. It'd be great if we have a higher low from here that would create a bullish divergence on the RSI and the price action and give us some upward momentum. We are still in the thick red money flow on the market side for B, so it doesn't look like we're going to be exploding out of this bear market anytime soon. But like all previous bear markets, once we do have a solidified bottom, we'll tend to go sideways for a couple of months and then see a decent market recovery. So let's jump into the daily. So the daily doesn't give us any more sort of good news, apart from that the sell-off should end pretty soon. So what I'd like you to sort of notice here is that the stochastic RSI moving averages have crossed over back into a bearish stance, very similar to last time that we've had this stochastic RSI do the same thing. And you can see that it basically was you could say it was an indication of the bottom when we've had the second crossover. Okay, so once we've had this second crossover, we should see some upward momentum. So what I'm expecting is for these moving averages to come down a little bit lower, maybe till Wednesday, and then we should see a reversal by Wednesday, which basically means we are likely going to see lower prices in the next 24 to 48 hours. We have already seen sort of that occur over the last couple of days. We had the dead cat bounce push us all the way to about 18,000, and then we've been sort of selling off very slowly ever since. So this would give us, like I said, a lower low here, hitting that sort of $13,000 mark would possibly also give us a bullish divergence on the daily RSI, and the price action would obviously create a lower low from where we are. On top of that, if we do zoom out and I look at the price action, if we do dump down a little bit further to $13,000, which is what I'm expecting right here, where this green line is, this also is the trend line from the all-time high to $48,000 to the apparent bump and run pattern that a lot of people probably FOMO'd into. So this would also act as support. So we have the trend line support. We have the, let me just remove, let me go into log. We have on the Fibonacci, we have the 85% retracement from the previous bear market to here. So you can see the 85% retracement, which is the same retracement that we've been to on the last two bull cycles, bear markets. So this is why I originally had this as my target. So not only do we have the trend line, which by the way, the trend line is moved because I'm in log. So once I remove log, you can see that the trend line still exists. So we have the trend line at 13,500. We have the 0.85 Fibonacci retracement, which is the same amount of retracement we've had the last two bear markets. We have the support from the previous bear market relief rally from where we went from 20,000 down to 30,000 up to 14,000 and back down. So we have some support here as well. And we have a couple of daily support levels from some of the candles that closed back here in October 2020. So this is why I have 13,000-ish, 13 to 14,000 as my market bottom. I believe that, of course, if we get a liquidity event, we could possibly even get down to, 5 figures, which would be an amazing buying opportunity. But I think there will be a lot of buy orders around that $13,000, $14,000. I think I've already checked the order books. I can see, let me quickly check. I'd have to check the order books, but previously from looking at the order books, there is a lot of orders sitting for Bitcoin around that price point as well, which adds to more validity on my thesis that I think we're going to head down to that $13,000, $14,000 mark. Let me just move the Fibonacci retracement to this low, the COVID low, and we can see that the 0.85 Fibonacci is at $13,548. So a couple of things line up to that in between that $13,000, $14,000. The high that we created back here in 2019, that is 13,916. So that's why I've got about $1,000 range. I know it sounds like a pretty big range, but we can see scam weeks happen. Depending on what exchanges, we may even have many different lows on different exchanges depending on the liquidity, and especially with all the FUD surrounding all the exchanges going on right now. It wouldn't surprise me if on some exchanges we might see $5,000, $6,000, $7,000, and on some exchanges we might see $10,000, and some other ones are different. So because the order books are quite thin with people removing their crypto off exchanges, we could see, like a fairly big crash. But whenever we see quite a big crash, like what we did here with COVID, we're going to see very fast buyback. If it is the bottom, there's going to be a lot of volatility. I'm just going to quickly check out this comment that I've got. Phew. Okay. No worries. One. Hopefully, yeah, a little bit of hopium is something that you guys want. Alrighty. On the daily, I can see that we're going to probably bottom out. That's why I'm sort of expecting a bit of a reversal by Wednesday. But the reversal by Wednesday probably means the market bottom hopefully is in the next 24 to 48 hours. I do think we've got one more leg down, but I do think that it's going to be the last one, purely for the fact as well that risk on assets are doing quite well. So we can see the market recovery last week for Nike, Tesla, Meta, Apple. Nike's obviously not risk on because it's just a company that I like because I wear a lot of Nike. But we can see that as well. The DXY is absolutely reversing. Okay, so here's a good example of a trend reversal. So we made a high, we made a low, we made a lower high, we've made a lower low, we've made a lower high. So you can see that the trend now is going to the downside. Now, because Bitcoin has had an inverse relationship with the DXY, normally we'd probably see Bitcoin, skyrocketing and having this, mid-bear run push to the upside. But unfortunately, with all the FTX news and, KuCoin and all the other exchanges that apparently doing, using a client's funds for leverage trading, all the rest of it, we've seen obviously Bitcoin pull back. So it's been it's a bit upsetting that, some people like that have now created more fear, which now is going to probably take it's going to take a lot of retail investors out of the market and probably forever, because if you lose a fair bit of money having your money on these exchanges, I'd probably put a very sour taste in my mouth as well. And, that would be one of the reasons I'd like to leave crypto altogether. But some people have high risk appetite. Some people knew that leaving money on exchanges, that is a risk you take. And this is why we always recommend you should always be using a Ledger or a Trezor hard wallet, or you can find any other hard wallet, but those are the two sort of main ones. Because if your coins are on exchanges, you don't really have sole custody. The exchange, if goes belly up, it's a bit like a bank run where people start taking money out of their banks because they're fearful that the bank's going to close, and they can obviously stop withdrawals, which has been present in FTX, BlockFi, obviously Three Arrows, everyone else. That's every other bad news that's happened this year. So it's happening, unfortunately, a bit too regularly in the bear market. But what this does is it strengthens the next bull run. Okay, people learn from other people's mistakes. The biggest thing now is every exchange is fearful of more bank runs occurring on them, so they're being very open with how much they're holding, all that type of stuff, which is something that they should have done in the past. But I guess we'll wait and see. But with the DXY going down, normally we'd expect Bitcoin to go up, but there's too much fear and uncertainty right now for that to occur. But I do think we hopefully will see a bottom this week. That's what that's what I'm sort of expecting. One last capitulation and then a reversal to the upside. If I sort of zoom in, let me go back to Bitcoin. Things don't look good on any sort of time frame. You can kind of see just this M pattern, or this very nice curve and price action. That usually just means lots of trouble. Here's just a previous one. Let me just remove some of these drawings so you guys can see the price action a bit better. When you start seeing this curvature here, that's always no good. And we're seeing the exact same thing here, just more curvature. What we like to say is when we see double bottoms, then the price is smiling at you. And when we're sort of forming double tops or rounded tops, we can say that the price is frowning at you. So right now, the price is frowning at us. It looks like it wants to make a lower low. Like I said, I'm eyeing out about $13,000 to $14,000. And that's what I'm sort of expecting. Let's have a look at, I got another comment here. You said before that we only have 6 months in this bear cycle. Does FTX debacle extend the bear market from that 6 months estimate? Good question. It possibly can, 100%, the same way that the COVID dump did exactly that. So if COVID had not occurred, I do believe that this would have been the relief rally sort of bottom around about $6,500, $7,000, because you can see that we clearly started moving to the upside. But then we had the news about COVID. We did another rounded top, and then we obviously capitulated. So I do think that it could slow things up substantially, because you can see, look at the length of time that we spent getting out of this bear market with COVID. So we basically, went another 220 days. It was a slow, grinding rise from 4,000 to about 12,000. And then we had the exponential increase. So basically, if we want to just, where's that tool that I like? We can do a bit of where is it? I'm looking for, there we go, bars pattern. So let's go from here to here. So we could see something like this, where we have one last capitulation like this. All right, where we hit 13, 14K, have a bit of a buyback, and then it settles, and then we finally sort of break to the upside. That's usually how things sort of play out. So I could see something like that occur. And if it does occur, then obviously, we're going to have a fair bit of sideways trading. And if we look at the time frame that we took to get out of this, this was 120 days, so that's 4 months. It took 4 months of sideways before we broke up. Now, 4 months back here was, very low. Well, it was decent volatility back then, but we were trading between 4,200 and 3,300, so about 25% move. So if we have a 25% move between, where we end up, 13.5 25%. So we could, we could go back and forth between 13 and 17,000 for a while, and then we have the explosion. The good thing is we need some sideways accumulation to occur, much like here, because this is what builds a bottom and strengthens the floor of Bitcoin for the next cycle. So where we end up here just kind of means that the next floor for Bitcoin, the same way that we build some solid foundation here back in 2018. So we had this solid foundation, and then when we had let me just remove that. So when we had that solid foundation, you can see that once we re-entered that with the COVID crash, it gave us some very good solid support. So we could see something like this where we come down to 13K. We've had support here. We've got the trend line support that we've already covered. We've got the 0.85 Fibonacci retracement. We form a good solid bottom around here. We have our bear market relief rally to the 618 retracements. I'm just eyeing this out, by the way, if this does occur. We have a bear market relief rally to about 50K, something like that. And then we see another sort of secondary bear market sell-off, come back down, maybe once again, come all the way back down to 13K, for example. And then we have a blast off to the next bull run. We could do something like that. But that doesn't seem like we would get a second chance around those prices. It would be more something like where we would draw another fib from where we end up. So let's say 13,500 to 50,000. And then we can see that we'd probably come back down to about 25K, which was where we had all this trading here. So it's all ifs and buts. This is all speculation, of course. Like, no one can actually guess what's going to happen. All we can do is look at the past and sort of predict the future. So right now, that's what I'm sort of predicting. Obviously, we had support here because we had the COVID dump, but like I said, I don't think we would have come back that low if we didn't have COVID, because what would have occurred is we probably most likely would have just come back to around about $6,000, which was here. You can kind of see we had all this trading here. So you can see here, support, support, support. And I think even if I bring it up just a little bit, something like that, you can see that here, that support also became support around here, but we only broke through that because of COVID. So I think that right now, because we had a lot of trading right here for like, was that 6 months? Was it June to November? So like 4 or 5 months, that is a fair bit of sideways trading. So I think this volatility that we're expecting just from all the exchanges going belly up is, the last kind of shakeout. But this should be around here. This could be the floor for when we do have our mid-bear market rally and we come down, and hopefully we settle something between $25,000 and $20,000. Alrighty, so that's basically all I can see on the macro, guys. If we look at what's going to happen sort of in the short term, let me just remove that. Like I said, every time frame looks really bad. We've got this curve, slow death. We're probably not getting an accelerated death just because New York doesn't open for another 7 hours. So I think there'll be a fair bit of volatility tonight. And we're more than likely going to sweep these lows. So what will probably happen, we might even have what's called a swing failure pattern, where we go to break these lows, everyone's fearful, and we grab the liquidity under 15,450, something like this, where we come under, grab all the liquidity, have a little bounce up, and maybe still make a lower high once again from here. So lower high from here, and then we just kind of finally roll over, like a bit of a skipping stone. When you see the skipping stones on the water, something like that. That's very bearish. That's usually what happens in these sell-offs, where we just continuously make these, extended rock skipping formations, and it just leads to lower prices. Alrighty, that is it from me. If you have any questions, feel free to ask them. I'll give you guys 20 seconds whilst I kind of have a look at some other things. But yeah, every time frame. So here we go. What makes me confident that we probably just sweep lows here, maybe have a bit of a bounce? We have the stochastic RSI in the oversold territory on the 4 hour. So we might just, like I said, small wick, maybe a little bit of a pump. Maybe we come back up to, a Fibonacci retracement, something like that. So down here, bounce up to, maybe 16,400 like this. So we go down, up, roll and something like that. That I could definitely see that, but I guess we will have to wait and see. But definitely lower prices. I've told you my target's 13 to 14K. That's where I expect the bottoms to be. So we've got a comment from Georgie Hope. Love it, rock skipping. Thanks, Matt. Yeah, rock skipping. You'll see it everywhere. It's just really, it's easy to spot. He's a pretty good rock skipping one. Okay, skip. Oop, no, yeah, very ugly. It gets very ugly. Oops, you can see it anywhere where we're just creating lower highs like here, boom, 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 and just collapse. So I'm expecting one last collapse. Here we go, more rock skipping. It just ends up to, it seems like you get a little bit of hope when you have this push, but then no, rock skipping occurs. And they're coming here. This was the good one. This was the best old rock skipping one. Alrighty, guys, that is it from me. If you missed the start of the video, please like, subscribe, turn on all notifications. For this channel, we do a live video each and every single day, Monday to Friday, educational content on the weekend. We have the altcoin technical analysis on Wednesday. I don't think we're going to have any good news unless we finally have bottomed out and we see the recovery. But until then, thank you for watching, and I will catch you guys tomorrow for the DC live stream news, adoption, and Twitter highlights update. Thanks. See you guys.